Hello everyone, and welcome to Unit 8 of our educational series, Stock Investing 101. In today's video, we'll be discussing one of the most popular topics among investors and traders, which is the stock market. If you're new to investing, the stock market can initially seem daunting and complex. However, with the right knowledge and understanding of how it works, you can grow your wealth over time. Our today's lesson has 4 objectives. First, we will discuss what is stock market. Second, we will be exploring how the stock market works. Third, how stock prices are determined. And finally, we will be learning who monitors the stock market. So let's begin with: what is the stock market? Simply put, the stock market is a place where investors can buy and sell the shares of publicly traded companies. Companies issue stocks or shares to raise capital. When a company goes public, it's essentially selling a portion of the ownership in its business to the public in the form of stocks. The money raised from the sale of these stocks can be used to fund the company's growth, research and development, or any other business initiatives. Investors who purchase these stocks become part owners of the company and are entitled to a portion of the company's profits in the form of dividends. The 2 major stock exchanges of the U.S. are New York Stock Exchange and NASDAQ. The New York Stock Exchange, located on Wall Street in New York City, is the largest stock exchange in the world in terms of market capitalization. It has been in operation since 1792 and has over 2,800 listed companies. Let's move on to our second objective. How does the stock market work? The stock market works based on the supply and demand principle. When a company issues shares, it offers a percentage of ownership to the public, and investors can buy these shares if they believe the company has the potential to grow and generate profit. As an individual investor, you can buy and sell stocks on the stock market through a broker. A broker is a financial professional or a brokerage firm that acts as an intermediary between you and the stock market. Usually, people open brokerage accounts with their bank. In recent years, online brokers have made buying and selling stocks easier and more affordable for individual investors. Many online brokers offer low commission fees and user-friendly trading platforms, making researching and trading stocks easy. Examples of online trading platforms include Robinhood, TD Ameritrade, eTrade, Webull, and Interactive Brokers. Are you wondering what Warren Buffett thinks about how the stock market works? It can be summarized by his words: in the short term, the market is a popularity contest. In the long term, the market is a weighing machine. It means, in the short term, market prices can be influenced by popular opinions, emotions, and trends. It can be driven by factors such as news, hype, and sentiment, which may not necessarily reflect the true intrinsic value of a stock. It can be volatile and subject to rapid fluctuations. However, in the long term, the market tends to reflect the true value of a stock, which is determined by the underlying fundamentals of the company, such as its financial performance, growth prospects, competitive advantage, and management quality. Over time, these fundamental factors tend to have a greater influence on stock prices, and the market tends to be more rational and efficient in weighing the true value of a stock. Buffett's quote emphasizes the importance of taking a long-term perspective in investing, focusing on the underlying fundamentals of a company rather than getting swayed by short-term market fluctuations, which can be influenced by popularity and emotions. We hope with this example, you understand how the stock market works. How the price of a stock is determined. You might be thinking, why the price of stock changes every day? Stock prices are determined in real time based on the demand and supply dynamics of the market. The market participants, who are buyers and sellers, interact with each other through a trading platform or exchange to execute their trades. The trading platform records all the transactions in a digital ledger, which is commonly known as the order book. The order book is a ledger that displays all the orders to buy or sell a stock, along with their respective prices and quantities. The order book is organized based on the price of the stock, with the highest bid price at the top of the book and the lowest ask price at the bottom of the book. The bid price is the highest price at which a buyer is willing to purchase a stock, while the asking price is the lowest price at which a seller is willing to sell their stock. The difference between the bid and ask price is known as the spread. When a buyer agrees to pay the asking price or a seller agrees to sell at the bid price, a trade occurs, and the price of the stock is adjusted accordingly. If there is more buying pressure than selling, the stock price will increase, and if there is more selling pressure than buying, the stock price will decrease. Who monitors the stock market? The stock market is monitored by various entities, for example, Securities and Exchange Commission, the SEC is a government agency responsible for regulating the stock market and enforcing securities laws. The SEC works to ensure that companies are transparent in their financial reporting and that investors have access to all the information they need to make informed investment decisions. Stock exchanges, such as the New York Stock Exchange, NYSE, and NASDAQ, are responsible for maintaining orderly markets and ensuring that trades are executed fairly and efficiently. Stock exchanges also establish listing requirements for companies that want to list their shares on the exchange. Financial regulators, such as the Federal Reserve and other central banks, monitor the stock market to ensure that it operates in a stable and healthy manner. They also have the ability to intervene in the market if necessary to prevent systemic risks to the financial system. That's a brief overview of the stock market, how it works, and who monitors it. Remember, investing in the stock market always comes with risks, and it's important to do your own research and consult with a financial professional before making any investment decisions. I hope you are able to understand the basics of stock market. Let us know in comments if you have bought your first stock. Thank you for watching, and be sure to subscribe to our channel for more educational videos on stock investing.